What is good, YouTube? Charon FX back. Lately, some of y'all been asking me in the comment section if my trading strategy works on crypto. If you really want to find out, just do yourself a favor by watching this video to the end, alright? And if you haven't yet subscribed to this channel, make sure you hit that subscribe button right now to be part of the family, alright? And also, if you're interested in joining my one-on-one mentorship, just DM me on Instagram at CharonFX. The link is in the description below. So with that being said, let's just get to business. So taking a look at BTC USD, we're on the H4 time frame. What do we need to do first? It's obvious the market is in a downtrend, but what do we need to do? We first need to identify the market structures within the trend. What did I say we first need to do? We first need to identify the market structures within what? The trend. Alright? So starting from here, what do we have here? We have a lower high being created by price. Okay, after this lower high was created, what did the market do? It came back down to create what? A new lower low. Alright, after this lower low was created, what did price do again? It retraced back up to create what? A new lower high. Why is this a lower high? Because this high is lower than that of what? Its previous high. So making this our new lower high. Do you understand? Good. So after this lower high is created, what does price do next? It continues back down to create what? A new lower low. Why is this considered a lower low? Because this low is lower than that of this low. Alright? Good. So now this becomes our current lower low. So now after we've identified what our market structures on the H4 time frame, what do we need to do? We need to go down to a lower time frame, which is our H1 time frame, to look for our entries. What did I say we need to do? We need to go down to a lower time frame, which is our H1 time frame. You can go down to the 30 minutes depending on you, but I prefer the H1 time frame to look for our entries. Do you understand? Good. So now let's go to the H1 time frame to look for our entries. Alright, so coming down to the H1 time frame, what do we need to do? Same thing we did on the H4 time frame. First things first, we need to identify our market structures on the what? On the H1 time frame. Already we know the H4 is bearish. How do we know the H4 is bearish? Because it's giving us a series of what? Lower highs and lower lows. So that's what we are expecting the H1 to also give us, a series of what? Lower highs and lower lows. So at this point, we are looking for what? Time frame correlation. Since the H4 is bearish, we expect the H1 to also be bearish, so we can continue to look for what? Sells. Do you understand? So now let's dive into the chart and identify our H1 market structures. So from here, we can see that price gave us what? A lower low, came back up to make what? A lower high, continued back down to give a what? A lower low. Why is this a lower low? Because this low is lower than that of what? Its previous low. So this becomes what? A lower low. Do you understand? Good. So after the market made this lower low, what did it do next? It went back up to create what? A new lower high. Why is this a new lower high? Because this high is lower than that of what? Its previous high. So now this becomes our current or lower high. After this lower high was created, what the price do again? It continued back down to create what? A new lower low. You get me? So from the structures we've identified on the H1, we can see that the H1 is also giving us a what? Bearish market structures. What did I say? What I said was, from the structures we've identified on the H1, we realize that the H1 is giving us a what? Bearish market structures. Alright, so after this lower low was created, after price came back down to create this lower low, what are we expecting price to do? We are expecting price to retrace back into the H1's previous lower high to retest it as a resistance and drop back to the downside. Mind you, this previous lower high is also serving as a support. You get what I'm saying? Yeah, this previous lower high is also serving as a support. So what we are expecting price to do is for price to retrace back into the support slash lower low to retest it as a resistance, then we'll continue back to the downside. Do you understand? Good. But what the price do when it came back to retest it as a resistance, it came back down but failed to break below its current lower low to continue back to the downside. Alright, so what it did was, when it came back down, it came back up again to retest our lower high for the second time. You get me? Thereby giving us a double top chart pattern formation. You get me? Giving us this M chart pattern formation. Some people call it M, but I call it a double top. You can also call it a double top. Do you get me? Good. And also, if I'm to take my Fibonacci zone and drop from point A, which is our lower high, and drag down to point B, which is our current lower low, we realize that our double top, which is formed on the support, is in confluence with our what? With our Fibonacci 61.8% level, which is also our golden level. Do you understand? Do you all see how we have about 4 confluences just around one trade? The first confluence is the market structure, which is bearish market structure. Second confluence, support being turned resistance. Third confluence, a double top is being formed at that same support area. Fourth confluence, that same double top is in confluence with our golden level, our Fibonacci golden level, which is our 61.8% golden level. Alright, so now let's go to our entry. How do we get our entry? Y'all take a look at how price retested for the first time. Do you all see the rejections? Good. That's the same thing. That's the same thing price did when it revisited the area again to form the double top. You get me? Can we see the rejections being formed by the candlesticks? Yes, you can see the rejections. After we get our rejections, what next are we looking for? We are looking for what? A bearish confirmation candlestick, which is a bearish engulfing candlestick. And if you know your bearish engulfing candlestick, we can see that in this second retest, there are a lot of bearish engulfing candlesticks being formed. You get me? So after we had this second bearish engulfing candlestick pattern being formed, that's when I enter my trade. You get me? I enter my trade right here, place my stop loss right above the zone, which gives me a 22 pip stop loss, and my first take profit at what? At our 0% level. You get me? So I'm expecting to take my first take profit at our 0% level. In case price is to break below our first take profit, then my second take profit will be at our negative 27 extension Fibonacci level. Do you understand what I'm saying? As simple as that. So now, do you all realize that my strategy works on crypto? It's the same thing I've been preaching, man. It's the same thing I've been preaching. Alright? So in case you all don't understand anything I did, can we watch the video to understand what I did? It's just as simple as that. It's just as simple as that. But and like I said earlier, if you're interested in joining my one-on-one mentorship, just DM me on Instagram. The link is in the description below. Alright, just DM me on Instagram. If you want to enjoy more of these videos, just subscribe to this channel. Alright, just hit that subscribe button and also like this video and drop a comment down below on what topics you want me to tackle. Alright, so with that being said, I'll see you in the next video. Ciao, FX. Peace. I'm out.